This weekly news flash is sponsored by Financial Independence Group. Our products are strong, but our strength is in our people. For more information, please visit joinfig.com. The president has reached a deal with Republicans to extend the Bush-era tax cuts for 2 years and unemployment benefits for 13 weeks. The deal, if approved by Congress, would result in a 2-year extension of all Bush-era tax cuts, an increase in the estate tax to a top rate of 35% with a $5 million exemption, a 13-week extension of unemployment benefits, a decrease in Social Security taxes on workers' wages to 4.2% for the next year, and continuation of the 15% top rate on capital gains and dividends for the next 2 years. Republican lawmakers achieved several goals in the compromise, including extending all of the Bush tax cuts. In addition, most Republicans supported the estate tax top rate of 35%. However, Obama is facing criticism from Democrats who sought to allow the Bush-era tax cuts for the wealthy to expire. The president initially pushed for tax cuts to end for households making over $250,000 per year. Obama said he supported the compromise because if Congress fails to act on the issue before the end of the year, the resulting tax increases could cost our economy well over 1 million jobs. Americans remain split over the healthcare overhaul, with 40% of adults in favor of repeal of most or all of the bill, and 31% supporting the reforms. A Harris Interactive Health Day poll released earlier this month found many respondents who support repeal also like many of its key provisions. For instance, almost 2/3 of respondents said they are in favor of the segment preventing insurers from denying coverage to individuals with pre-existing health conditions. Another 60% said they support the tax credits for small businesses that offer health coverage to their employees, and more than 50% said they favor allowing children to remain on their parents' insurance plans until age 26. The health insurance mandate is the least popular provision, with 57% of respondents reporting they oppose it. Of those in support of repeal, 82% view it as a government takeover of the healthcare system, and 80% said the legislation will lead to higher taxes. Another 77% said they think it could reduce the quality of care they receive, and 74% believe it could lead to health care rationing. Some experts think the poll's findings may reflect how many Americans lack knowledge of the specifics of the legislation. According to Thomas R. Oliver, professor of population health sciences at the University of Wisconsin, School of Medicine and Public Health in Madison, quote, "There's a substantial gap in the general public understanding, but the more informed people are, the more they understand," unquote. The poll surveyed 2019 adults between November 19th and November 23rd. A recent LIMRA study focusing on immediate annuities found that the average immediate annuity premium is $107,000, and 90% of policyholders choose to purchase additional riders that ensure payments continue to their heirs or that return the balance of the contract to their heirs in the case of their unexpected early death. Meanwhile, 2/3 of those who purchase immediate annuities also elect liquidity options that allow access to remaining principal, the study said. Such features should be a major focus for advisors who are looking to maintain clients' access to assets in the event of an emergency. According to Matt Drinkwater, Associate Managing Director of LIMRA Retirement Research, the average age of immediate annuity buyers is 73 years old. Quote, "1/3 of contracts use pre-tax money predominantly from IRAs at age 62 to 66, and then 70 to 71. That indicates to us that people are buying immediate annuities in conjunction with other retirement decisions, such as when to take Social Security and required minimum distributions from qualified plans," unquote. Immediate annuity sales reached $7.9 billion in sales 2 years ago, but declined to $7.5 billion in 2009. Drinkwater predicted that sales figures in 2010 would fall somewhere between levels seen over the past 2 years. For more on the industry, visit producersweb.com.